Senior gold miners have seen a recovery with the Yamana Gold Miners ETF, the GDX, recovering to pre-COVID levels. What does this mean for the health of the sector? Joining me to talk about the mining industry is Peter Marrone, Executive Chairman of Yamana Gold. Peter, welcome back to the show. It's always a pleasure to have you.
I'm happy to be here, and thank you for inviting me.
Let's start by talking about Yamana's operations during the last couple of months during the COVID outbreak. I know it's been a difficult time for the sector and a lot of different industries. How has Yamana coped? How has your strategy and tactics changed?
Well, I think to answer that question to begin, we have to recognize that mining companies, and we as one of those mining companies, have always been committed to ensuring that we're maintaining the health and safety of our employees and local members of the local communities. We're providing support to those employees, their families, and the local communities. And that's important because it is a distinction as compared to other industries. As a result of the COVID-19, we've implemented certain additional steps to ensure the health and safety of those employees and members of those local communities. They include everything from ensuring distancing, wearing personal protective equipment, and of course, making sure that we're maintaining proper hygiene. Contact tracing is an important part of what we've been doing as well. But look, a mining enterprise by nature is not one where there's a congregation of people. There is often the distancing just by nature of the way that people work. And personal protective equipment is normally provided because that's the nature of what we do when we're working in a plant or in a mine. So it has been just that extra step for us to cope with the protections required because of COVID-19, but it is an extension of what we were already doing in many respects.
Can you summarize how your production has changed in your various projects and how your production profile is expected to change going forward for the remainder of the year?
So we guided a certain production level at the beginning of the year. At the end of our first quarter, when we gave our first quarter results, we were already in the thick, in some respects, of the impacts of COVID-19. You are probably aware, I'm sure you are, that a couple of our operations for a period of time were on care and maintenance because of government mandated orders. This is true of Canadian Malartic in Quebec. It's also true of our Cerro Moro operation in Argentina. For different reasons. In the case of Argentina, it was travel restrictions, but the same result. Since then, we've been ramping up those operations. Both operations have now been designated as essential services. And in part, we've demonstrated to the health authorities of the countries the steps that we're taking, the protocols that we're ensuring to protect the health and safety of employees. And again, as I mentioned before, the local communities. But the result of several weeks of care and maintenance, and now the ramp up of those operations, means that there is an impact to our overall production. We estimated in the range of about 8% overall impact to production. We would see that mostly in Q2, and then that would improve in Q3 and in Q4. I'm very happy to say that with the support of all of our employees, all of our local contractors, we've ramped up at Canadian Malartic better than expected, and in the case of Cerro Moro, as expected. And so we're very confident that we'll be able to maintain the new production thresholds that we set at the end of our first quarter, which is in the range of 900,000 ounces gold equivalent. Okay. We're looking as if we're doing a little bit better than that.
Some analysts I've spoken to have said that they are bullish on the mining sector as a whole due to the fact that although we've seen a slowdown in production across many companies in the sector, we've also seen a decrease in energy prices as oil has fallen. Has that lowered your overall all-in sustaining cost, do you think, and how have your margins changed during this time?
So again, a great question. There's no doubt that the implementation of additional procedures that include distancing, where we transport people to site by bus, ensuring that we have more buses so that we're not crowding people into buses. We're making sure that we create distancing on buses, providing personal protective equipment, and ensuring that we're conducting proper questionnaires and temperature checks when people come to site. That does add a cost to the company. But there are several factors that are also providing a counterbalance to that. Clearly, fuel is one of those. although we're not so dependent on fuel. We are on some of our larger open pit operations. Malartic is an excellent example of that. But by and large, fuel represents about 5 to 6% of our overall costs. Where we're seeing more improvement to costs is with currencies. And with the devaluation, the depreciation of local currencies, for a period, this was true of the Canadian dollar as well, but we've certainly seen it with the Brazilian reais, the Chilean peso, the Argentine peso. That's providing a tailwind that is supporting, or that counterbalance to which I referred, to the negative impact on costs. And let me add one more thing, which is that as a result of self-isolation and quarantining and our efforts that have included, even at site, having office workers who can work from home, it also means that we have different costs on transport, a lowering of costs on transport, and travel costs have been significantly reduced. So all in all, we said that our costs would be in the range of about 5% higher than what we had first forecast at the beginning of the year, but with more guidance to follow with our second quarter results. As we now come to close close to closing the second quarter, it looks as if we're doing better than that 5%. We look as if we're closer to the high end of the range that we gave at the beginning of the year. So with the negative has come a lot of the positive on costs.
Stepping away from the mining sector for a minute, if we look at just office space across multiple industries, the work from home culture is anticipated to stay for a lot of different companies across many sectors. And that's just one example of some of the permanent changes that analysts foresee taking place. Drawing a parallel back to mining, do you anticipate seeing any permanent changes to your operations following the pandemic as we enter a recovery?
We're considering that. I can't say at this juncture that we've come to a conclusion, but let's face it, as a result of this being thrust upon all of us around the world, we've had to critically evaluate what are our needs and what is the right level of productivity. We have come to the conclusion, at least a preliminary conclusion, that the productivity loss that was expected wasn't realized. In fact, in many respects, we found that there is more productivity working from home rather than working from office. So we're looking at that. We have not come to a conclusion yet, but we are looking at that. There is an issue, and the issue is the boundaries. When one works from home, it is more difficult to establish those boundaries. We're sensitive to that too. We're sensitive to the fact, I'm not a sociologist, David, but I am certainly personally sensitive to the fact that we need human interaction, one person with another. And so we're looking at all of these factors, but the initial conclusion, that preliminary conclusion, is that there is a productivity gain that comes from working from home. And so we will be evaluating what is our office need.
Some economists we've spoken to have indicated that a full recovery in the global economy could be taking place. Are you seeing that from the mining side? Are you seeing an improvement in logistics that could mirror this sentiment?
Well, in the jurisdictions in which we operate, we did not see any change really in terms of the aspects of the business. And certainly on the supply chain, there was nothing that was presenting a challenge for us for any period of time. So it would be difficult for me to say that there has been an improvement because it's been comparatively steady state across all of our operations. Our local contractors, suppliers were really not impacted. They were going through the process as we were going through the process. We were providing an assist to them on how to make sure that they were putting proper health and safety protocols in place. But we continued with close to business as usual at all of our operations. So I can't speak to the broader economy, but I can certainly say that in the case of our operations, it has been very close to business as usual. I do not anticipate that there would be a change to that, either negative or positive.
And how do you feel about gold prices today? An analyst has told me that gold doesn't really need to go much higher for the miners to do well. Would you agree with that statement?
Well, I think that's correct. We've seen an almost, I'm reluctant to use hyperbole, but it's an explosive increase in gold price. We do not need a higher gold price to maintain these impressive margins that we have. We're generating free cash flow. We were generating free cash flow late last year with a gold price that was in the 1300s. We generated free cash flow in the first quarter of this year with a gold price that was close to 1500. And we're certainly generating more significant free cash flow with a gold price that is at 1700. And interestingly, with a gold price that is at the level that it's at, we are experiencing for every $100 improvement in the gold price. So let's use 1500 as a baseline. For every $100 improvement in the gold price, that represents about $100 of improvement to our EBITDA. So it's a very, very, very significant margins that we're generating at these levels, and significant EBITDA, cash flow, and free cash flow.
What would you say to the gold mining investor who is a little bit cautious about entering the space right now following COVID, who has seen mine shutdowns all over the world, who is anticipating a decrease in demand from consumers, which may affect actually more base metals producers? I know you're more precious metals, but miners all the same. What would you say to a cautious investor right now?
I would say that this is a time, because of that convergence that relates to the likely increase in gold price, certainly the sustainability at these levels. I'd say that caution, this is one of those occasions where caution should be put on the shelf. This is one of those occasions where one should be less cautious and one should be investing in the gold sector. But more than in gold as a metal, I think that one should be invested in gold equities. While gold price has gone to these levels in excess of 1700, today almost touching $1,800 per ounce, it seems to me that the gold equities are still not reflecting in terms of their values, in terms of their share prices. They're not reflecting that gold price. And so I think that the valuations are implying that it's a very, very good time to be entering the space.
Excellent. Thank you very much, Peter. I appreciate your thoughts today.
Thank you very much.
And thank you for watching. We'll have much more for you at the Mines of Money Online Connect. Peter Marrone is a speaker, and we'll have much more for you. Stay tuned.